Hey everybody, welcome to Al Stock Trades. We're just gonna we have the bottle of wine that we started yesterday, so might as well finish it. A couple things happened today in the market that definitely would want to talk about. We're going to be going ahead and doing some statistical analysis over the weekend, so we'll come up with some ideas over what's going on in the market, but it's very clear on the 200-day moving average. But yeah, no, grab a drink. This will be the last time I drink for the next couple of months. So cheers. Um, yeah, let's do the pour. And this wine had some time to air out, so pretty good. If you guys want me to talk about any stocks, do an intrinsic value calculation, let me know. I can't get over this wine. It's a really good wine. So I guess I started it early, the live here. So I think it'll be great to come inside here and let's see if the audio's in. Hello. AirPods. Hello. Okay, good. Yeah. Yeah. You want to do the open stock? We can look at open stock. I like open. Not bad. Okay. Yeah, some people are telling me, but I have my AirPod Maxes on. Some people telling me, Al, you're better than this. Stop making fun of Lou. I'm not making fun of him. I like his noise. It's pretty good. I'm not making fun of him. So it's not. I don't think I'm making fun. I'm just. In fact, he probably might get more subscribers now. You know what I mean? Hopefully, my people go up and see him. I think he's hilarious. Now, do I see him, as someone who gives good information? Well, that can be arguable, but so, yeah. So what we're going to be doing, what I wanted to do with you guys is let me share the screen here. Well, first let's talk about the market really quickly. The S&P 500 is down 3.3%. 3.37%, for all those people out there, the Dow is down 3.03 and the Nasdaq's down 3.94%. Okay. Russell's down 3.3 and crude is just about break even. Gold is down, which is very interesting when you talk about inflation because gold is a hedge against inflation. So we like to look at that because if it's going down, that's pretty good. And the reason why it's going down is because of this man here. Now, most of you guys probably haven't heard this today, but this was the Jackson Hole meeting, which pretty much is a very important meeting where a lot of Federal Reserve, former Federal Reservists, and economists and people that control the economics of our world, not just the United States, come and meet to discuss economic policy, which is why the market is red. Let's go on here. Let's go over the silver. It's down. Euro stable. The 10-year bond is up. And let's see. Bitcoin is Bitcoin. And nothing too important to talk about here. So what I wanted to just quickly, I'm going to just get out some boring stuff right now here. Let me make sure this is good here. But we'll go over some stocks. So open is on the list. Oh, well, how long do you think the squeeze will last once it starts to? Well, it depends. We have to take a look at the volume, some technical indicators, the short interest, and days to cover. It gets a little bit, into the data, if you know what I mean. Yeah. I feel bad for Meet Kevin. I really do. Definitely some weird things happening. I'm just like kind of overwhelmed by, he left, then he came back, and then he left. I hate to do this, but I'm a data guy. I'm all about data. And, sadly, when you're that big, YouTube is a business. For me, it's a hobby. So YouTube is a business, right? For folks like Meet Kevin. And let me just give you guys some, at least my point of view for Meet Kevin. So Meet Kevin, normally, his views sadly have been falling between 60,000 to 70,000 to 100,000, 97,000. If you go back here, he spent a lot of money on these market close and these components here. So this is a 50,000, 52,000, 18,000. So his views are going down, right? But if you look at another YouTuber, I forgot his name. What is his name? Andre Jeek. There it is. If you look at him, he has just a couple more subscribers than Meet Kevin. But you see that these are shorts. Shorts are different, and he just released these. If you look at his actual videos, he usually hovers around 248,000. Again, shorts are different. The shorts are here. Sometimes he hovers around 841,000. So Meet Kevin's views are going down, and sadly, and his subscribers are stable. So it makes sense why he was wanting to leave. There's just better ways for his time, to be quite frankly honest. Hello, hello, hello. But I don't like to talk about like that. I think that's sad, But what I do want to talk about is recession analysis. So this is our mastering stock market course. I use it because it's really damn good. I want to go to do this guy, and let's open the recession sniper. So normally, grab a drink, relax. This is like chill, okay? Normally, whenever you have the 10-year minus the 2 or the 10-year minus the federal funds rate dip down to a negative here, you most certainly predict a recession. All of the gray things here, I'm going to just put the mouse here on the bottom so you don't, because you can't see it when I do this. All the gray components here are recession. And what you can see is there's a dip right before a recession. I'm going to show you. There was a dip here, recession. There was a dip here, recession. Up, dip, recession. Up, dip, recession. So now what you can see here is now we're starting to dip. We've already dipped here. And usually I like to see both of them dip, but we're definitely teetering our way into a recession. Now, if you look at the recession sniper, normally when so think of bonds again. So this is not, for all the AMC folks, I'm like, we're very data driven. We're not BS. We give you guys knowledge. So if you guys don't want to talk about this, let me know, but this is going to teach you. This is useful information. So normally when you invest in a bond, there's a 30-year, 10-year, 5-year, and 2-year. And the longer you want to invest in the bond, the more you should get paid in terms of interest, right? However, when you get into a recession, the longer out the bond, the less you're going to make. And the 2 is going to pay you more than the 10, which is not good. Let me explain. So normally, there's my little doggy. Normally, in a healthy economy, this is how it's supposed to look like. The 30-year, which is here, is supposed to be higher than the 10-year, which is in red, which is supposed to be higher than the 5-year, which is in green, which is supposed to be higher than the 2-year. Now, what we're seeing now, let's go here and let's kind of zoom in here. We've gone to a point where the 2-year is higher than the 30-year. You know what I mean? This needs to be fixed. And when does it get fixed? Well, let's zoom out. Okay. Let's zoom out. You see how it turns into a sniper? It gets bunched up. I call that like a sniper. in the heart and soul of the United States economy. Oh my God, it's so visual. But you need a recession, which is in gray. And as soon as you hit a recession, it's almost like kind of a mirror, which refracts. It goes like bullet, 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 recession, and it fans out. Fan, healthy economy. It starts the bullet, 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 recession, fan. Bullet, 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 recession, fan. Bullet, recession. And now we're bulleting again. Okay. So I hope that makes sense. Most folks don't look at this. We like to do it because it's important. Now, let's go ahead and just briefly go over, and then we're going to go over some questions here. We're going to go over this guy here, Jerome Powell, and it's going to explain why the market is red, which will explain why stocks are red. In fact, here, let's take a look at our hedge fund indicator here. It seems to me that smart money is starting to buy. I think if the market goes down more, dumb money always sells unless they got smarter over time. But historically, they're going to sell, and smart money is going to start picking up shares, which means that now would be a great, I mean, at least what I'm doing is a great time to double down and get some picks. Now, that came out of nowhere. So now let's go ahead and let's look at the heat map. So this is directly from our private Discord. We have a bunch of bots to help. You could do the Russell. Let's do the S&P 500 here. So when we do that, go ahead, take some time. Today's a red day. Today is Bloody McBloody. Okay, today's blood as the eye can see. I think these are the two stocks that were okay, and then we have the small one here I can't even see. But the rest of the market was down today. Apple, negative 4%. Microsoft, negative 4%. Google, negative 5%. Google other one, negative 5%. Berkshire Hathaway, negative 3%, which I am a shareholder of, okay? So, yeah, definitely not looking good, all right? Now, why? Well, a couple days ago, we went ahead and we gave a warning to all of our, again, we like to give warnings and our data is like, we could get you about a week or two. Sometimes we're a month in advance, but we went ahead and we gave a data here. Where'd it go? About, it was here, about the dumb money, smart money. I guess the wine must be kicking in. Let's see. There it is. I'm like, I know I talked about it. Okay, so it says here, this is the battle you have to ask yourself right now. We are in a bear market or bull market. Usually when dumb money confidence spread is greater than 60% during a bear market, we usually have a leg down, as you can see within the image. Personally, I think we are in a bear recession market. So because of this, I said that since dumb money is so confident, and when I say dumb money, I'm talking about dumb money. Dumb money is here. Dumb money is in red. Dumb money's been confident lately, okay? So I said that since dumb money's confident, if you look at the next week, 2 months, 3 months, 6 months, 1 year, if you look at the average, it's looking actually pretty bearish, okay? And I hate that, man. I hate it, right? But it's looking pretty bearish. But it's okay because that's when you can get majority of your opportunities. So that's exactly where you can get majority of your opportunities. So that's kind of where we're at here. All right, let's go ahead and talk about Mr. JJ here, J Powell. And then we'll go ahead and answer some questions, analyze some stocks you guys want to go over, and we'll go in and talk about Upstart. I see some Upstart. So let's go ahead and do some of that. So let's share. And we'll take a break in the middle. I want to talk to you guys. So we'll do a half break from the J Powell discussion. So let's go ahead and do that. Let me know if you can hear it, please.
Symposium. Jerome Powell, the floor is yours. Please come to the podium.
And if you want, you can decrease the speed on YouTube if it's too fast for you.
Thank Good morning, everyone. Esther, thank you very much for the opportunity to speak here today. At past Jackson Hole conferences, I have discussed broad topics, such as the ever-changing structure of the economy and the challenges of conducting monetary policy
Sorry, that was my fault.
under high uncertainty. Today, my remarks will be shorter, my focus narrower, and my message more direct. The Federal Open Market Committee's overarching focus right now is to bring inflation back down to our 2% goal. Price stability is a responsibility of the Federal Reserve and serves as a bedrock of our economy. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor.
By the way, I want to pause the video. I want to thank Kim. Thank you so much for the super sticker. I just scrolled down and I just saw it. It didn't warn me. That really means a lot to me. Thank you so much, Kim. I appreciate it. Thank you. Again, any money that we get is going to be reinvested back into, making this channel better. So I really appreciate that. Thank you for helping out.
On labor market conditions that benefit all. The burdens of high inflation fall heaviest on those who are least able to bear them. Restoring price stability will take some time and requires using our tools forcefully to bring demand and supply into better balance. Reducing inflation is likely to require a sustained period of below-trend growth. Moreover, there will very likely be some softening.
You said it was too fast, or we'll slow it down. We'll slow it down. We'll do 1.5. You can change it on your own YouTube, but we'll slow down.
Of labor market conditions.
We'll start it
While,
back here.
In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. The burdens of high inflation fall heaviest on those who are least able to bear them. Restoring price stability will take some time and requires using our tools forcefully to bring demand and supply into better balance. Reducing inflation is likely to require a sustained period of below-trend growth. Moreover, there will very likely be some softening. Okay,
this is important. I hate to stop the video, but I used to teach economics for the executive MBAers at the University of Arizona. This is important. What he's basically doing right now is he's saying that in order to defeat inflation, we have to be comfortable with decreased growth. Now, this is the problem. Google, which I'm a fond believer of, now I have to alter their price targets. Upstart, which is why a lot of folks are like, why is Upstart going down? Well, because it's a growth company as well. A lot of these growth companies now are going to take hits because it's going to be harder for them to make money in an economy where demand is going to be diminished. Okay? Very important. Okay. So now that we're going to do this, now we also have to look at the unemployment rate. So again, I'm sorry to stop the video, but the whole point is to dissect it, and because anyone can watch it, right? But I'm trying to give you my experience. I have 10 years of experience of this information. So I'm going to go ahead and share with you the screen so I can go ahead and move it so I can show you. Let me go ahead and do this. My computer's buzzing out here. I want to show you the unemployment rate. Unemployment rate. So if you look at the unemployment rate right now, and this is directly from our website. We like to put everything on here. We can look at the unemployment of high school graduates, the unemployment rate of bachelor degrees, and you can see obviously the bachelor degrees have better employment. But right now, I'm more focused on the general unemployment. Now, if you were to basically drag a line to low unemployment levels, you can see that every time we get to low unemployment levels, we get a recession or close to a recession. So we have that part of the criteria set. Now, you have to admit, we've never had unemployment levels this low. So I think, and I've looked at his past remarks in former FOMC meetings. So I believe if you were to analyze this, let's zoom in on here. I believe he is going to push us up to an unemployment rate anywhere between 4 to around 5.9%. I don't think we're going to go here, but I think it's going to be around 6% unemployment rate. He's going to push us up like that. And I think that's still pretty good. And then we can go ahead and do the easing. But that's I think one of the only ways to basically stop inflation. So it's okay for him to push up unemployment, raise interest rates, and decrease demand. Let's continue on to Mr. J. Powell. I have to share the screen with audio. So
Softening of labor market conditions.
There it is. See, he just said it.
Higher interest rate, low trend growth. Moreover, there will very likely be some softening of labor market conditions. While higher interest rates, slower growth, and softer labor market conditions will bring down inflation, they will also bring some pain to households and businesses.
You see, he just said he's going to basically soften the labor market, aka raise unemployment rates and raise interest rates, which is going to hurt the American people.
These are the unfortunate costs of reducing inflation. But a failure to restore price stability would mean far greater pain. The U.S. economy is clearly slowing from the historically high growth rates of 2021, which reflected the reopening of the economy following the pandemic recession. While the latest economic data have been mixed, in my view, our economy continues to show strong underlying momentum. The labor market is particularly strong, but it is clearly out of balance, with demand for workers substantially exceeding the supply of available workers. Inflation is running well above 2%, and high inflation has continued to spread through the economy. While the lower inflation readings for July are certainly welcome, a single month's improvement falls far short of what the committee will need to see before we are confident that inflation is moving down. So we are moving our policy stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%. At our most recent meeting in July, the FOMC raised the target range for the federal funds rate to 2.25% to 2.5%, which is in the summary of economic projections range of estimates of where the federal funds rate is projected to settle in the longer run. In current circumstances, with inflation running far above 2% and the labor market extremely tight, estimates of longer run neutral are not a place to pause or stop. July's increase in the target range was the second 75 basis point increase in as many meetings, and I said then that another unusually large increase could be appropriate in our next meeting. We are now about halfway through the intermeeting period. Our decision at the September meeting will depend on the totality of the incoming data and the evolving outlook. At some point, as the stance of monetary policy tightens further, it likely will become appropriate to slow the pace of increases. Restoring price stability will likely require maintaining a restrictive policy stance for some time. The historical record cautions strongly against prematurely loosening policy. Committee participants' most recent individual projections from the June SEP showed the median federal funds rate running slightly below 4% through the end of 2023. Participants will update their projections at the September meeting.
So again, very clearly here, so he wants to go ahead and he wants to adjust the federal funds rate. Now, we just talked about our recession predictor. And if you look at a recession predictor, it basically took the 10-year minus the federal funds rate, right? And the higher the federal funds rate, the lower the sum of the 10-year minus the 10-year minus the federal funds rate. So the 10, let's just make an example. If I take the federal funds rate and I push it from 2 to 4, then what's 10 minus 4? Okay, right? It's going to be 6. But if it was 2 earlier, then it's going to be, it went from literally 10 minus 2, which is 8, down to 6. The higher the federal funds rate, the lower the number and the lower the growth, which means then you start getting an inverted yield curve, okay? So that's exactly, I'm teaching you guys some economics here, how that affects the market, okay? All right, let's go back. Let's go back here.
Our monetary policy deliberations and decisions build on what we've learned about inflation dynamics, both from the high and volatile inflation of the 1970s and 1980s, and from the low and stable inflation of the last quarter century. And in particular, we're drawing on 3 important lessons that I'll highlight. The first lesson is that central banks can and should take responsibility for delivering low and stable inflation. It may seem strange now that central bankers and others once needed convincing on these 2 fronts, but as former Chairman Ben Bernanke has shown, both propositions were widely questioned during the Great Inflation period. Today, we regard these questions as settled. Our responsibility to deliver price stability is unconditional. It is true that the current high inflation is a global phenomenon, and that many economies around the world face inflation as high or higher than seen here in the United States. It's also true, in my view, that the current high inflation in the United States is the product of strong demand and constrained supply, and that the Fed's tools work principally on aggregate demand. None of this diminishes the Federal Reserve's responsibility to carry out our assigned task of achieving price stability. There is clearly a job to do in moderating demand to better align with supply. We are committed to doing that job. The second lesson is that the public's expectations about future inflation can play an important role in setting the path of inflation over time. Today, by many measures, longer-term inflation expectations appear to remain well anchored. That is broadly true of surveys of households, businesses, and forecasters, and of market-based measures as well. But that is not grounds for complacency, with inflation having run well above our goal for some time. If the public expects that inflation will remain low and stable over time, then absent major shocks, it likely will. Unfortunately, the same is true of expectations of high and volatile inflation. During the 1970s, as inflation climbed, the anticipation of high inflation became entrenched in the economic decision-making of businesses and households. The more inflation rose, the more people came to expect it to remain high, and they built that belief into wage and price decisions. As former Chairman Paul Volcker put it at the height of the Great Inflation in 1979, inflation feeds in part on itself, so part of the job of returning to a more stable and more productive economy must be to break the grip of inflationary expectations. One useful insight into how actual inflation may have...
I want to pop the video here. So pause the video, pop the video here. Please like it, and it will help with the YouTube algorithm. But I want to imagine, like, at the end of the discussion, Jerome Powell said, "This concludes my discussion." I was like, "Holy shit! Lou has somebody on the inside." The Illuminati sign. All right, let's go back.
may affect expectations about its future path is based in the concept of rational inattention. When inflation is persistently high, households and businesses must pay close attention and incorporate inflation into their economic decisions. When inflation is low and stable, they are freer to focus their attention elsewhere.
Okay, he said something interesting. Let me dial it back. So he said basically the longer inflation rises, the more it's going to basically be priced into wage and price increases. We'll tell that to Elon Musk. He's been freaking raising his prices of his car. Foods prices have been going up. You really think those prices are going to end up coming back down? I don't think so, right? But, I get what he's saying. The longer inflation is, then X, Y, and Z. By the way, thank you so much, Julio. Every time someone donates to me now, I'm going to be like, thanks, man. Thanks.
Former Chairman Alan Greenspan put it this way. For all practical purposes, price stability means that expected changes in the average price level are small enough and gradual enough that they do not materially enter business and household financial decisions. Of course, inflation has just about everyone's attention right now, which highlights a particular risk today. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. And that brings me to the third lesson, which is that we must keep at it until the job is done. History shows that the employment costs of bringing down inflation are likely to increase with delay as high inflation becomes more entrenched in wage and price setting. The successful Volcker disinflation of the early 1980s followed multiple failed attempts to lower inflation over the previous 15 years. A lengthy period of very restrictive monetary policy was ultimately needed to stem high inflation and to start the process of getting inflation down to the low and stable levels that were the norm until the spring of last year. Our aim is to avoid that outcome by acting with resolve now. So, these lessons are guiding us as we use our tools to bring inflation down. We are taking forceful and rapid steps to moderate demand so that it comes into better alignment with supply and to keep inflation expectations anchored. We will keep at it until we're confident the job is done. Thank you.
Then he pops up. Ooh. By the way, when I say donate, I mean to the channel. Everything that we invest into our software, into providing you guys data. I don't take any of the money. I promise you that. I mean, just look at what we offer. It's insane to think that. In fact, we're actually giving away more than what we're putting in, what we're receiving as of now with the data that we're collecting. But in that regards, just very easily, I want to cover BBBY data. Yes. So let me explain to you. You must be new. Let me share with you. So yeah, we have this program here called Al Stock Alerts. Let's go here, alstocktrades.com. But yeah, any money we get, we put into the software. So we've been featured on Bloomberg, Yahoo Finance, and here's everything we offer. We have testimonial videos down here if you want to listen to them. Yeah, here's the data that we offer. The data does option flow, algo flow, dark pool, fear, all this stuff we offer. So, but I can share with you some of the stuff that we're going to be using now for BBBY. Now, so let's go ahead. Wait, oh no, I'm not ignoring. I just saw BBY and I was like, I can answer that question fast. What about the student loan stimulus for short term? Do you think that'll help? Let's see what other questions you've asked. So okay, so my brain is weird. I like do things in a weird order. I like rank it, so how fast I can answer it. But this is more of kind of like a qualitative answer more than a quantitative, meaning that it doesn't quite need that much data. So what about the student loan stimulus? Well, first of all, in the short term, I really think let me take this off because when your ears get all, all right. So let's go ahead and talk about the student loan stimulus or the forgiveness. Well, first off, it's only going to go ahead and help out a certain group of folks. Now, a lot of folks that are in law school and med school, I hate to say this, but they're going to end up making a certain amount of money that is going to essentially make this specific amount not needed for them, in my opinion. I feel like it should be more targeted to people that are teachers, to people that are going to be making $75,000 for their expected job. So that is a big problem there, an argument that you can say people would have. In terms of inflation, I think this may impact inflation. I don't know. I don't have that data. We've never done something like this, but I will tell you what it will impact. a lot of institutions and universities, what they're going to end up basically doing is they're going to basically go in now and they're going to increase prices of their colleges because you artificially inflated demand. And now supply is basically stable. Now, if you go to FAFSA, which is the area that gives you out the federal student loans, which basically qualifies you for the grant for this stimulus, the website's down because now everyone's applying for student loans, which is crazy because now everyone's applying for school. So you've artificially increased demand. Now universities are going to say, well, with these increased demand, we're going to have to increase prices because we have a lot of staffing, emails, and all these things that they got to do. And it's bad because it's going to add to the central poison of if you Google college tuition versus wage, there's a wonderful graph that I'm going to show you right now that explains to you the issue that we have in this country, which is quite simple. If you look at percent change in college costs, the average earners since 1980s hasn't really changed that much. But if you compare it to the average college costs, you can see that it's skyrocketed. So this is obviously going to artificially increase the gaps in college costs because that's what happens when the government subsidizes something. It basically disrupts market value. Now, if you go ahead and basically say, all right, we're no longer going to support college scholar, grants or anything. Now, students are going to have to pick specifically based on value. And then they're going to have to do some calculations on that. And they're going to pick institutions that are much cheaper. And then universities are going to have to start basically cutting and starting to essentially cut down costs because now they're in competition to one another. It's a simple supply and demand and economics. So that's how I feel about the your question about the student loan stimulus. And I hope that if you have another one, let me know. Let's see here. Oh, it looks like we have a troll. I love trolls. I eat them for dinner. I love trolls. Come troll me, habibi. Freaking awesome. I use a 24/7 info layout. Very easy. Of course, yeah, definitely takes a lot of practice. For sure. But let's look at BBBW. All right. So let's go ahead and take a look at that. So let's go in and go to our, so we can do this both ways. We can go to the top short squeezes and the mastering. So if you go here, and if you're part of the mastering, you go to the high short interest stocks overall, you click on this, and what you see right now is BBY is currently second, still pretty high. The float's 76, and the short interest is 40%. Here's Upstart. Again, Upstart's short interest is 37% with the float at 69. I understand there's a lot going on with Upstart. And here's a couple. I don't see, I can search for it really quickly right now. We can search for AMC or APE. I don't see it right now, but it was earlier on there a couple weeks ago. As you guys know, it did go up to around $30. Now, let's go ahead and finish our discussion using the data really quickly here. Let's pull up some space here, zoom in, and maybe zoom out a little bit here. And let's go into the short interest. Give me a couple seconds because we have like over thousands of commands. There it is. So there's one here. So we can go in and look at the short volume really quickly. And what you want to do is you want to see it slowly start going up. Let's look at BBBY. This is all included within the thing, within our OWL stock alerts here, which is like literally 2 cups of coffee or less than $12. You can see as it basically starts increasing. We saw a short squeeze happen here. We are slowly seeing an increase. You want to basically go ahead and monitor this and monitor the short volume and watch it in a stepwise fashion go up. BBBY just basically secured funding, and which basically means that the probability of bankruptcy has decreased. Again, they could get themselves in a new hole, and Amazon might press the gas. So there's that argument. I'm trying to think short squeeze. So if you would have followed our platform, let's go to our top short squeeze back on. If you go all the way back. If you go all the way to July 5th. July 15th. I think it was a gamma. Yeah. If you look up July 20th, and here we were talking about BBY earlier on, July 19, BBY, and you can see the dates here. We were talking about this stock before anyone else was talking about it. And here's actually AMC when both AMC and BBY went up. And obviously, BBY went up a little higher because we know that AMC is manipulated. But if you look at BBY back on July, and if you look at it, we definitely had a great time with the stock. We saw a massive jump, really amazing, over 400% jump. So that was really fun to see. So there's kind of like my 2 cents for BBY. And for all the people that are in the mastering, if you click on here, click this button, it'll take you directly to Yahoo Finance. So you can kind of like go if you want a little bit more information. So we kind of have it paired up with our website. Okay. Now, let me drink some water. I think that's the first good start. All right, let's go back to a couple questions here. If I can't get to your question, I'm sorry. I'm going to try my best. Yeah, so we just talked about Upstart, so that's done. In terms of Open, we can do an intrinsic value calculation on Open, so we will pin that. So I remember. So watch my last video regarding the AMC squeeze. I think we are close, but again, these criminals are going to sadly, they're not, creating synthetic shares is legal, but not to the extent of what they're doing. Okay. And we already know that they are willing to cheat and do criminal sus things. So I think this is going to be a long drawn out battle. They have gotten smarter. What about Desktop Metal? They have hit their revenue guidance and growing 200% year. Can you do a stock analysis? Yeah, so I can do this one here because I've done Open Door, but I will go back to Open Door. But we can do is Desktop Metal, which is I believe a ticker symbol DM, right? So I'm going to teach you guys how I analyze stocks. I do it in a very different way than most folks. And it's a fundamental way like Warren Buffett does. So we can go ahead and we can tear up the stock. So here's the financials. Now we can do this two ways. We can get the financials this way, which is a lot easier. We're going to be programming this with inside of our software. And for all the people that are in our stock alerts, what we can do is first we can download the financials or type in help, open up our help menu, and let's look at stock fundamentals. And we can pull up the balance sheet, net income, all of these things. In fact, we could just do it like this, the annual. And then we can do DM for the desktop, and then we can pull it this way, and we can get the Excel spreadsheet. We can download it, and then it'll give you the Excel spreadsheet for the company. Now, I think people, this way is great, but for the presentation, we can just pull it up from here. Okay. So as you can see right now, the first thing I look at is I look at desktop and I look from 2012 on to 2022. I see that the revenue went down starting here. So definitely 2018 was a year to get the hell out. They were doing really well. Gross margins hit here. So I would have gone out 2016. I would have pulled out in 2016. Once you saw a dip like this, this is definitely something sus here. Whenever you see gross margins, again, the higher the gross margins, the more money the company gets to keep. Operating margins, you see there, you see a decrease. You see a decrease there. So you're already starting to kind of tell a story. Net income, okay, this is good. It was an increase, but then all of a sudden, a year out, we got negative. They're still negative. In fact, they were negative 500 million. So definitely, this is a red flag for me here. Okay. Earnings per share. Definitely now they're negative. They were heavily negative in 2018. 2018 was a bad year for them. They probably diluted shareholders. Let's see. So shares, boom, 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 boom. Okay, something weird happened here. I don't know what happened, but something happened with this company during this time. Now they have a lot more shares. Okay. Let's say boom, 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 boom. Book value. Again, it's going up from here, but we'll see if they beat the book value. Still very tough. Free cash flow is negative. So this is the red flag, another red flag here. Okay. So let's take a look at the stock price. We can pull it up here. DM stock. And let's take a look at what would I say? 2016. I would have gone out 2016. I would have pulled out. Let's see. So I don't see any historical information. Maybe the company something happened or just maybe got publicly traded, but I don't understand why there's financials for them. So let's go ahead and go to our graph. We have our own graph here for the mastering, so we can pull it up from here, the price action. This is directly from our website. It makes things a hell of a lot easier. So we can go ahead and look up DM. And let's look up all. Yeah, that's interesting. Weird. Did I not? Interesting. Let's see where the stock is at right now. So that's different. So let's go ahead and let's do our intrinsic value calculation. So I'm going to push this on to the side here. And we can go ahead and do our calculation to see essentially what's the growth rate here. So overall, right now they are growing pretty intense, but you have to understand for DM, I don't think they're going to continue growing 200% year over year. I doubt that. Oh, thank you so much, Jeffrey. Thank you. It was a SPAC. That makes sense. So I probably got data pre-SPAC. That's probably why. But we could go ahead and calculate the price of this. So if we want to put the number of outstanding shares, so they got around 314. Again, this number is in millions. If you want to calculate their growth rate, I personally, you could just kind of do it. We can pull it up from here if it's available. If not, we can just do it from our software. So they're growing 200%, like you said. We could look up the advanced leverage DCF, which kind of gives you kind of a price target from our software. We're looking at, definitely negative. They're growing, like you stated, the revenue percent. This pulls information directly from Wall Street. They're expected to make this much in. That's impressive, but that's assuming 227% growth. So what we can do is we can go in and take this 200%. I personally am only going to be taking, I want to say 25% of that. I just doubt it. I doubt that they're going to be able to grow that much year over year for the next 10 years. You just got to be, because again, you got to be careful, right? So I will take just about 25% of that. So you do that, you multiply this. Oopsies. You get this, you multiply. Hold on. So by this, you got 50% growth rate. So we can go ahead and be humble with it. We'll do 35% growth rate. And we'll hit them up with 10 years. Now the free cash flow is negative. That's the problem. So there's a way around that. So we could say, well, 112, 183. We can hit them up with I would say with this company, since it's tough, I would say 3%. 3% as the estimated free cash flow of the company. Oops. Doing this super fast so we can answer a lot of people's questions. So we could just hit up the free. It doesn't matter where we put it. It just takes the average 3.36, 5.49. So the stock price, I would say anywhere between $1 to $1.91. Now, if you can grow it to 200%, as you can see, it's impossible. This will never reach these prices. So I would say 35% is a great growth rate. I would say if they continue growing at that, there's ways to estimate the price to projected sales. So we could look up. We have another intrinsic value calculation with another way of looking at the revenue projections and what that means for future revenue. So if we have them growing at 35%, and they're going to be starting out right now, they have 183 million. So we can grow them out, and what we can do is we can give them the highest, let's say in 5 years, 600 million. So we can inject that within our calculation. So we could take, I would say we could push this to 400. We'll push this up to 600. And if the company does become free cash flow positive, we can say 20 and 30. So this is the value. This is pretty much what I would be paying for the company, anywhere between recession level of $2 to $10. So now we can go look at the price of the stock. You see, 52-week high, $9.26. 52-week low, $1.26. This is fundamental investing, and you see, literally right on the dot with literally a 20% margin of error. Okay, so I hope that was good. This is kind of how you calculate DM. Again, we will teach it to you much slower on the mastering for all my students looking. They're like, what in the world just happened? Yes, Ray Dalio says we're going to be down another 25% with an additional 75 basis point hike. I heard about that. And for folks that don't know, we talked about this in on our Discord, but sometimes I release it in the community button. Literally a day ago, I literally released that. Ray Dalio's Bridgewater, world's largest hedge fund, says he will drop another 25%, right, with the Fed QT. Literally what you said. Right? We are on top of it. Okay. So let me see. I'm like going through your questions instead of exactly. And the higher, let me be clear. The higher the interest rates are, the more it's going to cost to borrow, and these shorts are going to have to eventually cover. Okay, so all we got to do is just got to sit on our butts, right? In your 10 years of experience, have you ever seen the Fed exert this much control on this market? Is this normal? Yes. So if you look at the Paul Volcker eras, let me explain. Yes. Okay. I'm like thinking, how can I show you this? So if you look at the Paul Volcker eras in the 70s and 80s when inflation was literally rampant, Paul Volcker, back in the day, you could talk to your family, when they wanted to buy a house in the 80s, the interest rates were like 17 and 20%. You know what I mean? So yes, they have initiated this much control over the market. They have to, because inflation is going to cause problems. Just go look up Venezuela. It's not looking good. I can show you the inflation rate, but you just look up in fact, here, let me just show you. Again, we have everything on our website here because, again, we try to give you guys everything you need for any questions you might have. Again, if you look up the 80s here, you could see inflation is literally at its highest here. And usually it takes a recession, which is in dark kind of gray, to bring us back down. So this is not anything different. This is when Paul Volcker came in the 70s and 80s. And for people that want to read more about him, just Google Paul Volcker. He is a true American patriot. And this is where he was 12th chairman of the Federal Reserve from 1979 to 1987. People that want to learn. Likewise, the M2 money supply is how much money was injected within the economy. A lot of money was injected here. Okay, you can see it just literally went up throughout the history. And now look what the Federal Reserve is doing. I'm going to push it out to 2022. Okay. Boom. Look at that drop. Boom. Look at that. Boom. No. All right. Let's go back to answer some questions. Let me know how I'm doing. Am I answering your guys' questions? Am I hitting them up? I'm giving you guys data. You know what I mean? Right, from Arizona. Okay. Sorry if I'm pausing. I'm just looking through your questions. Yeah, so Jay-Z. So what we can do for Jay-Z, not the rapper, we can look it up here. Okay. We can look up the stock. So if you look up Jay-Z today at 7 a.m., Jay-Z here, we got a signal at 7 a.m. that it was a good stock to look into. So you could see if you type in the stock, if you go to our robo stock, at 7 a.m., it's literally 7 o'clock in the morning, Jay-Z came online and he started rapping. So let's see what happened at 7 a.m. today. In fact, we could just go here. Let's see what happened to Jay-Z. Yeah, look at that. See that in one day. So this was at 10 a.m. So you would have been able to catch that at 7 a.m. You would have been able to beat everyone to it. See, this is what I'm talking about. This is how powerful our Discord is. Our Discord doesn't F around. And if you want to get into the play and you want to see what support and resistance lines exist for this company, we can go in and look at the support and resistance lines that are artificially, like using artificial intelligence. So, I mean, let's see. Hopefully it pulls up Jay-Z and you put it in caps. We'll see. There it is. So this is the minute. So you can see that there's a lot going on here. It just opened up online. So you would have to go to the next level. So we can go to YouTube Lives. We can open up TA. Jay-Z. We can look it up this way. Yeah, you can look up the resistance levels here and the Fibonacci retracements, which is kind of a little off. The issue was getting allocated shares. I see. Instead of forgiving loans, they should increase grants for people who can't afford schools. Yeah, exactly. I honestly think that would definitely help. What about revenue? Which revenue? Sorry. The Fed is not going to do real quantitative tightening and rip their Band-Aid off. They are a bunch of cowards. I agree, because so why is he saying this? I'm just going to give you 5 seconds. The reason why he's saying they're cowards is very simple. Because back in the day when the Paul Volcker, who was a real man, we're talking real man that went to war, right? Not sissies like us, right? Our war is AMC. That's our war, right? The reason why is because the debt we have tremendous amount of debt, guys. I mean, we're talking about the debt levels that we have now in comparison to what we had in the 80s is completely different. They can't increase interest rates too much because the U.S. can't afford the debt. They can't afford the interest on the debt. I'm laughing because it's really bad. Al, do you think AMC will start moving back up soon? Good question. So let's go ahead and take a look at the algo score really quickly. Usually I like to look at the algo score every day to basically see where are options people thinking. We're going to be included. Whoa, look at that. Look at this manipulation. Look at this manipulation. Barcode, blah, 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 while the algo score is going down. We do see a little blip there, but that basically tells me a lot. Let's go ahead and do our Monte Carlo machine learning projection. This goes 10 years into 30 days into the future. Let's look up AMC, see if there's any projections. In 30 days, the bear case could be AMC could go lower. However, the base case here is hovering more closer to the bull. We are seeing some downward consolidation, and so it's looking pretty tough on there. Let's look up any dark pool levels for AMC. Yes, so we are seeing holy crap, look at that. Woo-hoo! We're getting 55 million shares bought at $10. Okay, look at that. That's a big number. That's a big number. Okay, that's a big number. Wow. Let's see if we have any data registered for Ape. I doubt it since it's new. Whoa! Oh, this is freaking weird. This is weird. We got to make a separate video about this. Holy freaking shoot. This is new. Look at this. Dark pool levels for Ape. $6, 73 million shares. $7, 114 million shares. That is freaking S. That is BS because most likely freaking retail never sold their Ape shares. So why in God's hell do you have, this is pure synthetic garbage. That's what that is. Looks like the option chain is on for AMC. Someone double check that for me. All right. Let's see. I don't think inflation's ever going to go down. Dems throwing gas in the fire, constant stimulus. Well, that's the thing. They're gonna have to make it go down. They're gonna destroy it. Definitely economy. Is AMC larger? Overstock squeeze? That's a good question. You watched my video. Let's put it this way. They had to take away the buy button to stop retail. They didn't do that for overstock. They have gotten smarter. I want to say yes, but I think I think so. But these people are criminals. You know what I mean, this is their money. They don't want you getting their money. Absolutely, absolutely. You know what? I have to. You know what, guys? Let's pause. Let's go to Lou here. Give me a moment. I got to see how I don't want to like make my own noise. I want to make sure. I want to make sure I accurately do his noise. So let me hear it again. Let me hear it again.
What's going on, my silly little motherfucker?
Oh, I see. He's got what's going on, my silly motherfucker. He's like, that's what he does. I'm going. No. He goes. It's a little more higher pitch. It's a higher pitch. You see, if you got to analyze it.
What's going on, my silly little motherfucker?
I can't believe we're spending time on this. We're going straight like, graphs and everything to just being funny. Jay-Z was an IPO, and we were able to see how our Discord was able to catch it. Pretty impressive because we have a bunch of bots there. That's what it's like scanners. And another thing about scanning here. We also have an actual scanner in here. If you look up scans here, we have a bunch of folks searching. We do have a membership with Unusual Whales, which normally costs you like, I don't know, whatever they charge, a lot of money for short volume. So we have the volumes here and the shorts for it for the top short volumes of stocks. But like, for example, here, Dish, one of our members, he was scanning for stocks. And if you want to know what scans that we have, these are all the scans that we do. And these are kind of the commands that they give you. There's different levels you can search for. You could search for a bullish engulfing, bullish hammer eye, inverted hammer, doji, morning star, different types of technical analysis indicators, and search all stocks to see if they have this pattern and then go in and find them. You can look up Wall Street Bets, popular stocks. You can look up X, Y, and Z. There's just so much we can low float, high float, whatever, your mama's float. You could do anything. Okay. Let's see here. Can you please take a look at IMMR, its intrinsic value and predicted price, please? It has huge potential. Yeah. So this is kind of like how we're going to be doing this in our bi-monthly meetings. So we're going to be doing this soon in our meetings for the Al Stock Alerts and Mastering. So I think it's pretty helpful. So let's take a look at it. We may decline the intrinsic value if I see there is no value. So we'll look at the financials right now. Let's take a look. IMMR. If they're bad, then there's no point. And I'm going to teach you if they're bad. So there it is. Let's open this up, put it here. So as you can see, we have revenue for the past 10 years, literally no growth. So revenue is no growth. Gross margins are pretty damn high. That's weird. I've never seen that one before. That's kind of weird. I mean, I'd like to see these margins, but I would double check the data. They just became net income positive shares. Okay, there's no major dilutions for your cash flow. Pretty damn good. Okay, this is something we can do. So let's take a look at it. All right. So let's take a look at this price just kind of real quick here. IMMR. Just curious. Okay, not bad. All right. So let's take a look at the intrinsic value calculation. Take a look at the revenue growth real quick here. If it says it. It doesn't say here. No worries. We'll calculate it. So we could do the last 5 years, but to me, it doesn't seem like it's growing a lot. It just doesn't. It's not growing. You can see that here. If you look at Google, it'll say that it's actually there is no revenue growth and the net income. So yeah, I'm gonna have to unfortunately grow this kind of artificially and just grow this at maybe I would do 2% just for keeping up with inflation. For free cash flow, they are free cash flow positive. So I'll do 27. And in terms of their shares, I would do 34 million. Yeah, this is the stock price. Anywhere between $6 to $10. Yeah, right around, you see? Right around that price. Personally, their growth, unless they have some type of major catalyst coming, we can search their media and hopefully they might be able to, have some major catalyst. And yeah, then if they grow at least 15%, then we're talking big bucks, 20%. But the question we have to ask ourselves is, what do they do? That makes sense. So they troll. So they basically troll people for a living. I'm kidding. That was a joke. Haptic technology. Okay. All right. So yeah. So Rev stock. We have it on our short squeeze. If you want me to look at the financials. Pull it up here. So here's Rev. So Rev, pretty stagnant growth. Slowly getting up there. Gross margins, it's pretty all right, and net income is negative. So that's something that we don't want to see. Shares is pretty standard, which is impressive. Free cash flow is negative, which is not good. Yeah, so it's definitely a tough company when you look at something like this, and they just recently underwent bankruptcy. I have to understand why they would do bankruptcy, but it's probably because maybe they have a lot of debt. They can't pay. Hey, yeah, that's exactly what it is. All right, so let me show you. So let's go to our Discord here and let's go back to our proprietary technology, which is Brain Machine. Okay. There's our logo, which you can see in the back here, our logo here. So based off of this, oh, I see the ticker. I finally got it. I'm so sorry. Um, yeah. Let's look up the help menu here. A fundamental analysis. Let me search through it. Now, what you can do is you can look at the company's ratings too. We're going to be including more commands such as sentiment scores and everything like that, which is going to be very helpful. We can look up the ratings, and the ratings of B plus, DCF score, strong buy. The recommendation, there was a sell. We have a sell here. We can look up what analysts think. So you know how you have tip ranks. You don't have to pay money. We got it. We got you covered. We got it for you. We can look up price target here for Rev. See what other folks are saying. Uh-oh. We're not getting any. That means there's not really, which makes sense. It's going bankrupt. Let's look up any of this. Let me just double check to see if it's Tesla. Yeah. So it's working. It's just this is Tesla's low and high. It's just the reason is I got this mother effer is a bear. What did you know? The high is 526. Yeah, okay, so let's go ahead and open up the help menu again. Let's go back to stock fundamentals. What I want to do is I just want the balance sheet. So check this out, my man. So let's go ahead and let's open this up a little bit here. Well, you know what? Screw this one. I don't like this one. Let's do. There's a reason to have that, but there's a. I like this one. Let's do complete CFQ, complete financial report. Let's look at the data and let's look up Rev. Look at the complete report. You see, this was the complete report. I assume you want the complete. Who doesn't? So if you go, oh, come on. If you go to the revenue here and let's push this out a little bit. So I'm going to go ahead and I want you, again, this is 2021. Okay. Again, this is annual. Okay. Look at the assets here. Look at the liabilities. See that? Total assets over total liability. Whoa, hello. Over total liabilities. You see how it's the same? And now it's even more. Okay. It's double. Which means that they have a lot of debt. Debt's like, look at this debt increase in the past couple of years. They doubled their debt. Looks like 2020 was really bad for them. So that's why they're undergoing that. So this is something I wouldn't invest in unless it's a short squeeze. And you can use our technical indicators. So I would go back to our Discord here. Go back to, I don't know, our stock research. Look it up to see if there's any support resistance lines. And hopefully, yeah, it looks like we're getting a base at $6. So hopefully it could be a pounce. But we have been dropping. Okay. Stimulus, I'm talking about the student loan and the semiconductor bill worth $1 trillion. Yes. So in terms of semiconductors, Maryville Technology, AVGO, we have price targets on them and I analyze them. Great stocks for semiconductors. They're located in our long-term price targets page, which are all the companies that we analyzed. So we have that. Oh, could they ever let me tell? I know exactly. They're in cahoots with a lot of these folks, and a lot of people in the SEC tend to end up working for them. It's a tough battle. Together, which have an effect. Clove, my darling Clove. So no news yet regarding Clove. They just had their earnings. They did really great. They just got a CFO. They are going to be expanding. Yeah, no, everything's looking pretty good for them. Nothing new in terms of after earnings, which, it's normal. Every 3 months you get something. By the way, hello from Virginia. Wait. What's going on, my silly mother? What up, Ape Nation? All right. Are you familiar with Circa? It's a penny stock. Well, I am familiar with the Circa. A Circa is a group in our Arizona that gets physicians fired if they break the law in terms of having sexual relationship with their patient or stuff like that. It's pretty. So that's why I was like, I just learned about it. Like, Circa. That's a scary word for us. You don't want to see that word. But in terms of penny stocks, yeah, we can look them up here. And you can here's the thing. We have like thousands of commands. So you can push this ticker to all of our commands. And by the time you get out of our Discord, you're going to understand, you're going to know more about Circa than the CEO. You know what I mean? That's a fact. Look at the support and resistance for Mr. Circa. Cirque. Yeah, so definitely we got some resistance here oscillating. Let's open it up on the week. Again, these green lines are AI support lines. It pre-graphs it for you. Let's look at the week. Whoa. We have a support line at 30 cents. If it breaks, we have a support line at 23. If it breaks that, we have a support line at 17 cents. Be careful, my man. Be careful. Clove held up well today. Exactly. I agree. We talked about this earlier. I do not think we're going to hit June lows. I really don't. I think the new range is going to be 250 to 310. UA alumni here. Bear down, baby. Yeah. Huh. I'm from Tucson, so yeah, it's a little. It's our football team, or it's our mascot in general, not just football. Al, can you do one on Wish? So I spoke about Wish yesterday. It is decreasing its revenue. Gross margins are going down. Net income, I believe, was negative, such as free cash flow. Definitely very scary. I also made a video on it. It's somewhere in my history. Looks like a strong support level. Exactly. I agree. Clove is my biggest test of patience. Very true. I agree. What would be the date for 90 days, Mark? It's tough. Honestly, I think these criminals are going to basically try to psych us out of this play. Looking for SPLX testing 72 Monday. Can I say something? I want to vent. I'm a little upset. So I hired out this team to help me with something, okay, for our software. I've been waiting a month. They said it's going to be done today. And it's not. And it's just really annoying. Okay, vent done. Just like, I'm like, ugh, you know what I mean? I'm trying to pass it on to my freaking members, and it's just so annoying. Yeah, touch, exactly. When you feel it with the mobile screen. Yep. Oh, yeah. Yep. Just like the ones on the haptic technology on your iPhone. Mm-hmm. Or the, yeah. It's tough to say. I do see some dark pool levels in Ape. So there's some, remember, I don't know if people that are just tuning in, Ape had some dark pool levels, which is really freaking really weird. Like, why is Ape having dark pool levels? Weird. It's just really weird. Nordstrom is one of our price targets. I do believe it's doing well. I do believe retail is coming back in terms of this region, and I like it. I would do another analysis on the next quarter to see where they're going specifically. But let me just quickly kind of go over it here. JWN, right? So I'm familiar with the stock. Just very quickly here. Yeah, I have no problems. So you know what? Let's do JEWN, because all the stocks that I've been getting were bad. Let me show you guys what a good stock looks like. Okay. So JWN. Okay. Revenues are going up pretty good. You know, the pandemic tore them up, and then now they're slowly getting up. Gross margins are coming back a lot of live. They were negative. They're returning back to their mean. Net income was negative here in the pandemic, and then now it's getting back to its historical norm around 400 to 500. Earnings per share, they're finally getting back to their normal, their pre-pandemic, which is near the threes. Dividends, they're getting slowly increasing back their dividends. The number of shares, they are not diluting shares. In fact, they are buying back shares because it's undervalued. The book value returning back to its pre-pandemic. So that's good. Free cash flow, definitely getting back to free cash flow. In fact, better than what they were before, which is pretty impressive. Just really quickly, let's go to our brain machine here, and let's look at our advanced leverage DCF, which then shows you the stock price. It does a quick evaluation of the stock price of what it's supposed to be worth. So we have this guy. Let's do advanced DCF, AWN. We have this guy. So definitely a lot bearish on this end, and because they have them growing at 1.85%, which is I wouldn't say that. Let me go ahead and say I'm busy. Yeah. So what we can do is we can have them and look at their price target, but I have their price target here. I believe my price target's $28. Somewhere in here. But yeah, so that's what I have for J. Yeah, no, I really like it. I really like it. I mean, honestly, it's not about getting clicks. I really do. I mean, you see how I'm laughing, right? I'm really genuinely enjoying the guy. And I don't really care about clicks. I'm going to be a doctor. I'm going to be a physician. So it's not like, I want to be a full-time YouTuber. No, it's not. I'm doing this because I love people and got the software to help folks, and we're subsidizing it and all that. So no, it's not for that. I think it's fun. Just kind of little, just pick at him and go. Are you expecting a crash the first part of the year and second half? I think the second half is going to be good. I do think we need a crash. I believe the second half is going to be strong. It depends how this recession is going to play. I do believe a red wave is coming. I do believe we need oil to be back in control. I believe that we need to start being primary exporters and not primary exporters, but I do believe that we need to really ramp up our goals and restarting pipelines and doing all those things needed and slowly get into this green energy movement. Again, we have to basically crawl before we walk, right? Do you have a date for our first meeting? Yes, for the first meeting, I don't have a specific date, but it's going to be somewhere in September. I'm still trying to finalize my schedule. It's very choppy right now with medicine. And then once that happens, then we'll have our own private channel. Again, it's going to be fewer folks geared to you guys, and you guys are going to be asking some good questions, and it'll be essentially all of you guys on a call so you can talk to me. So it's not like through chat. So it's a lot more involved. Speaking about that, let me go ahead and invite. Let me invite. So I like to do this at the end of the call. Here's the call. Here's my StreamYard. If you have a camera, if you have a mic, please click the damn link and talk to me. I want to talk to you guys. I want to get to know you. Okay, so click on the link, open up your microphone. Let's have, in your camera, let's have a chat. If you want to ask me questions, go right ahead. Let's have some fun. Cheers. I'll be waiting. When I was at with the fan on over my head and it kind of going like this. Somebody join me. Yeah. Hey, somebody join me. Come on. Hey, what up, brother? I'm here with my daughter. Wondering about AMC. Yeah. So, I'll show you this right now. If we sub to your channel, do we get free man? Man, brother, I wish. Brother, I wish. We spend the most on health. Don't even get me started. We spend the most on healthcare, but our healthcare outcomes is that of a developing country. God, what the hell are we doing with our freaking? Oh, I tell you, man. Now AMC. This is a good question. Okay. So if you look at our dark pool data, here are the dark pool levels for Ape. Why the frick is there 114 million? Again, this is M. Why is there 114 million shares in the dark pool? It's not like freaking Ape sold it. Maybe some idiots did. But why is it in the dark pool? This is weird. Okay? Very weird. Well, let's go back. Let's go back in time, okay? Do you remember before Wall Street Bets and all of the ape community went into AMC? AMC was trading at around $1 or $2. Remember that? I don't want to be harsh, but they put themselves in that situation. Okay? We never wanted them to be at that level. And I hope that they freaking get the message that they should take this seriously. Okay. So hopefully they don't drag the stock to the shitter of how they did originally. And I think management knows this, which is why they're doing this, to help with their free cash flow. But it does look like they We're going to have to see how this plays out. At least they didn't dilute AMC. Okay. The synthetics covering concept of ape has been around for a few months now. Exactly. Yeah. The chart was adjusted on Webull. Yeah. But this dark pool level is weird. Absolutely. Come on, guys. No one wants to join me? Come on, guys. Here's the link again. No one wants to talk to me? Come on. Don't be shy. You'll get free healthcare. I'm just kidding. I'm joking. I wish. Watch. That's a funny one, huh? I'm too ugly. Wish I could turn. Nah, man, I'm the one who's ugly. Look at me. This week I've been destroyed. I got to work out too. I got to get my energies back. You know what I mean? I got to get my muscles back. Not adjusted on Thinkorswim, but I'm hoping it will be. Good. Thinkorswim is a professional, used by many traders. I'm surprised they weren't first on top of it. In my jammies. Yeah, no. Sometimes I'm actually wearing something right now on my jammies. Usually I like to be in my underwear when I'm making a quick video. That's a TMI, but when it's late at night. But I am in my sweatpants right now. Hello, I'm from South Korea. Oh, man, that's good. He didn't say North. I'm just kidding. Welcome. Wow, we got a South Korean here. Woo! That's really cool. I appreciate that. No, I appreciate that. I mean, it means the world to me. You know, I want to visit South Korea one day. I want to visit Japan. I want to visit all of that side of the world, and I want to try all of your guys' food. Very nice. Yeah, so it changes day by day. It depends if I have time or not. But usually my play consists of our short borrow rate stocks. We're going to be putting the graphs again to help you look at the borrow rates here. Same with the short squeeze stocks. Okay. I like to take a look at that. I like to look at the gamma. I also look at whatever the bullseye sends me. So bullseye basically is an AI that basically tells me signals that, hey, there's a 65% chance this is going to play out. I also look at the dark pool levels, who's buying what. That this comes in the feed. Insiders, if they're buying or selling stock, it's kind of funny. Today you saw a bunch of insiders sell all this stock. Look at all the insiders selling this. So I like to look at the crypto signals, breakouts, and more specifically the stock breakouts here, the breakdowns or breakouts. So it depends on the play. I use the Discord, like for example, social spike. Like let's look at Apple, bullish, social spike. You know, I look at all these things, and it depends on the play. But for long term, definitely, Clove is good, and we just got out of End phase. End phase is great. So it's like that. I could not buy or sell AMC or APE yesterday, Friday. That's really weird. That is weird. Has anyone experienced that internationally? Can we? Oh yeah, for the South Korea joke. Can we open? Can we open? Open like you want to do you open like open stock? You want to do the open stock, or do you want to I'm confused. You got this. Good vibes. Hell yeah. You don't want me talking live, in my opinion, on what the market is going to do the next week is completely different. No, hey man, listen, it's freedom of speech. You can do whatever you want, right? Except show your booty, right? Can we do open stock, open door? Yes. Let's take a look. So institutions, let's look up institutions. So let's go to stock research. Let's look at the algo flow for open. See what the algo. Hey, this is called a bullish divergence. When the stock price goes down, but the algo score goes up. That's bull. That's good. One so far, so good. So that's good. Let me think. What else? Let's just do a general search, see what it picks up on our Discord. I just did that. Someone looked up the price. Someone looked at the price. Oh, Coco, she scared the shit out of me, dude. Coco, calm down. Oh my god, my heart just like, oh my god. She never barks. So when she barks, I'm like, who the fuck was that? Oh, you scared me, Coco. So if someone did the price right now, the stock price is $4.61. It's okay, baby. And the DCF is $7.53. So that's a good. This is a short term. He did a short term DCF, which means that it's definitely going to be hitting this price soon. This is very short term. Okay, let's take a look at this. Unusual whales. Just opening. We can do a little bit more strategic search. Look at open door. Okay. So now let's go ahead and take a look at the company. Guy actually graduated from the university. He's actually from Tucson, so it's really cool. All right, let's see. So from open right now, I definitely see a huge increase here. We are just for my calculations, what I'm going to do is I am just going to be taking these many years to make it a little easy. Gross margins are getting better, so this is a good thing to see. Operating margins, definitely big change here. We have net income, definitely bigger number, but now it's a lesser bigger number, so it is heading towards in the right direction. Earnings finally getting into net zero to get back up to positivity. Shares, definitely they did a lot of dilution to stay afloat. Free cash flow, definitely in the negatives, but they're slowly getting out of the funk. Working capital is going up, so that's good. I love to see that. Now, I want to open up documents because I looked up the stock before and we made a video about it. So if you can help me find it, let's take a look at it here. Let's see. Did I delete it? Maybe I deleted it. Well, that's sad. All that hard work. No worries. This is why we have the thing here. So I made a video, which you guys should watch, regarding Open Door. It's going to be more involved than what we're doing now. So let me pop this guy open. In fact, if you Google Open Door stock, Al stock trades, it should pop it up. There it is. So do the one that's recent. Oh, so I made this video and then they did an upgrade right after I made the video.
Investments that will ultimately build generational wealth.
Now, I know normally I am in suits and ties. I'm probably going to be like that next week because of a clinic. So it is what it is. But this guy did an upgrade. What was the price again? I forget. 66% in the upside. So that's good. But I would recommend looking up this because we do a lot of quantitative analysis.
Stock trades. In this video, we're going to be doing
So this is a 25-minute video, definitely involved. I'll open up the data and we really do an intense analysis. We go ahead and give you graphs for Open Door. Oh, you saw that video. Oh, you did. What's wrong with this? What the hell's going on? Oh, what's going on here? Sorry, I gotta tighten it. So good, you saw the video. Yeah, so did they just recently report? Better yet, here's another thing. See what they have here. Hmm. Yeah, I mean, honestly, nothing's changed from my horizon. I would need a couple more quarters to readjust my price target,
Okay.
but
Okay, we're not going to spoon feed you. Let's look at the industry 220 a little bit point. It's rising G. Okay.
yeah, so I honestly think that's from our intrinsic value for open. Let's go back up here. If you look, let's go down. If you go ahead and look up the DCF open, so $7 for that. So that's good. If you look at price target, to open, so $9 high, target low is 50. Target consensus 8.75. Let's go advanced leverage DCF. Yeah, it's still negative, so it's very difficult to find the value of this because this is an old-fashioned way of doing it. It's better. The mastering stock market and intrinsic value is a lot better. Now what we can do, if you guys are interested, we can do kind of a linear analysis. So a great way to do this will be fun. This will be different. So we could do a linear analysis and we can see basically how much are they growing. So the best way to do that is to look at the intrinsic value calculation and to calculate their growth rate. Okay. So we can easily do that by going here. Okay. And we can just kind of go in and, I don't know, let's see what they're growing right now. This is more kind of a quarter over quarter basis. I doubt that they're going to sustain that. I would say, 35% is safe. 35%. Let's do 40%. So we can have them grow at 40%. Oops, sorry. We can have them grow at 40%. We can now open up the technical analysis here. And we can do open. You can open up. This is directly from our mastering. We can look up the price to sales. And it's currently open door technology. There's this symbol. It's currently trading at 0.9 revenue multiple price to sales. Let's push it up to a price to sales about 0.5 to make it fair. So if we do a price to sales of 0.5, and what do they have right now? The revenue projections is, I'm sure it's going to be a lot higher. Just to kind of what we will do. Yeah, we did an advanced leverage, so we can do revenue projections. And tab it. We can, I don't know, let's look at like 5. Let's look at, 5. See if this works. 14 billion. Yeah. So let's go back and let's have them at 15 bill. And let's go back to the outstanding shares. They have around, sorry, this is taking a while, but this is this is how long this takes, so. Yeah, this is a pretty intense, guys. Pretty intense. I would say 40%. I like to be a little bit bearish, so I would say how much is Zillow growing, right? So let's look at Zillow, right? Because I think Zillow is a great way to look at a company. So Zillow, they're decreasing now, but we can look at how much they've been growing, historically. And again, the housing market has been on boom, but we can look at pre-pandemic. So we can look at revenue. So Zillow, we'll take the lowest number, 20. Let's look at 20. Let's do 23% for Zillow. I think that's what I did for the video. So we'll grow them at 23%. So this, yeah, even with this, and was it 15 billion? Yeah, guys, this is, look at this. So anywhere between 9 to 15, 11 to 4, 11 to 18, 20, this 2025 all the way up to 2032. I mean, this could be the potential rise of Open Door. I mean, guys, this is just look at the bearish levels. I mean, look at these prices. These are very good. Very good. Extremely good. So this is what I like to see. I think they bring down so we can cover. So that's pretty much where I'd say your right inner. All the spending we are going to be. So we're about close to hour and a half live. So I think we're about ready near ending. Just kind of going through these comments here. Amazing. Yeah. So I'm looking at it, and you saw me. I kind of like redid my analysis and kind of doing things. And also, if you guys want, Seeking Alpha came to me, and I think Seeking Alpha would do really well with the mastering course because it gives you some other people's opinions. They just gave me a coupon code that brings down the price to $99 a year, rather than the $300 or whatever, $250 that they charge. So if you guys are interested, they gave me the coupon code. If you guys want it, I can give it to you. I haven't really talked about it. But I like to pick sponsorships that help my community. You guys would not imagine. I mean, let me show you the. I don't even want to show you the sponsors. Well, yeah. There are some sponsors that are really sketchy. I don't even want to give them the spotlight. They're like really sketchy. I had one crypto company. Hey, we'll pay you if you talk about us. Shut the F up, dude. Freaking piece of shit. I swear to God, dude. It's terrible. And I'm sure other fucking tubers, they do this crap, Yeah. 2008 just needs to hurry up. Oh, yeah, you're ready to go. Hey, why don't you, in my next video, come down and talk to me, man. I love your smile. Come on, man. I want to talk to you guys. You can click the link and be able to see. All right. Hey, man, God bless you guys. God bless you. I love each and every one of you guys. Cheers. Have a wonderful weekend. And, to my main man, Lou. No. How does he do it? What's going on, my silly mother? Love it, Lou. Okay. Isn't Open Door tied to the housing market and the Fed raising interest rates? I don't see. Well, you have to understand. It's very true. As the Federal Reserve increases interest rates, the price changes and the houses are going to get higher. A lot of folks bought houses, especially in Arizona, to sell them the year after, and they're basically shitting on them. I'll give you an example. Like, what am I doing explaining myself? Let me share with you here. So let's go to Zillow.com. Okay. I'm going to load this up. Let's do house searching. Let's look up whatever this random zip code. Let's look up. Let's open this up. Let's look at. Let's look up $500,000 here. I'm going to up it up a little bit here. Let's look up houses. Okay. Okay, let's kind of analyze these homes that came up, okay? Let's stop it at 1.1 million, kind of crunch it up a little bit. Let's look at this house. Okay, so someone's selling this house. Let's see when they bought it. Okay, so this person's a normal human being. They're selling their house. Ah, we have one. Sold at 2020. Now they want to get out. Okay, so literally 2 years. Next. That's a not normal house. Let's look up the history here. Not too much history. Okay, this one's a normal house. I don't want to bore you. But what you're gonna find in Arizona, it's very historic. You're gonna find a bunch of folks that bought houses in 2021 and 2020, and they like to sell it fast. They want to just hold it and hoping it raises up 10, 15, 20% and selling. Just like that, just like the stock market. Humans are stupid, okay? Now they're sitting on their booties right now trying to get rid of these, and Open Door is going to basically be able to take care of that as well, okay? That we will do on our next video. Please subscribe. Again, guys, I love you, okay? You have no idea, okay? And, comment on Lou. Tell him, come to Outstock Trades. I swear, I will get you Uber. Dude, come on. Let's Uber Eats, No. What's going on, my silly mother? How he has his tongue to the side. I don't know how he made that, right? I love you guys. God bless you, and I'll see you on the next one. Peace.